Welcome back to Friday Crypto. Here's our Thursday update, doing updates twice a week, Mondays and Thursdays. We're going to look at Bitcoin today, primarily on the daily chart. We're going to focus on the daily, look at some patterns in the past compared to now, look at key levels to be watching, looking at moving averages, looking at maybe emerging patterns. We're going to also check out the DXY or the US dollar index. And also Bitcoin dominance. So if you like the video today, give us a thumbs up. Follow us on Twitter, Telegram, and Patreon. If you want to learn a little bit more, Patreon has a little bit more content and more tips and tricks, that kind of stuff. So all that is linked right below what you're watching now. So going into our current daily chart for Bitcoin, right? This is the bigger picture, right? That we've been going down since late November. And now where are we? Well, we're way the hell down here. We are currently at 29.3, but not that long ago, like about an hour ago, I think we were about 28K, 28 on the nose. If you see the low up above there, right? 28K today. Exactly. So what does that mean? Well, we've broken our lows, right? We were I had an alert here. You see these lines here. These are our alerts because, once you break one of these, you're doing something more significant than you've done prior. So the top side is 31.5 because that would kind of take out these highs. The low side is 25.3 because that would take out our low. And then I had one also at 28.5 because that was kind of our local lows here. And we broke that just briefly before kind of recovering rather swiftly. So what does that mean? Well, nothing yet, right? Wicks tell the story where you went for the day. The closes are the important part. Now, if it closed down here, that could be a potential, bigger warning than what we've got now. But just, price flexing down there for a minute could just be a fake out. We need to be watching closely today's close. If, however, we turn green, and how would we turn green today? We close higher than yesterday, which was 29.5. So if we close at 29.5, we're only $150 from that as we speak. We're getting a little bit higher. So this could actually end up closing green and would be a little bit more of a bullish candle. Look at the long tail, right? Just like we had back on May 12th, a flush down and then a recovery led to a nice little, at least, temporary relief. So right now we're holding resistance on this line here, this moving average, the EMA 8, exponential 8 moving average on the daily. So we really need to get 2 daily candle closes above that to kind of confirm a more possible sustained breakout. That would also likely entail us getting to the top half of these daily Bollinger Bands. See this purple median line? That's also the 20-week SMA, or the 20-day SMA, excuse me. And you also have their 20-day, 21-day EMA. I like to use both of those. They're kind of defined more bullish and bearish. If you're above those both, you're looking to have a little bit more bull momentum. If you're below, it's just simply more bearish momentum in my book. So in order for us to have a sustained relief rally, we need to, close above the EMA 8, close above the median Bollinger Band, and also the 21. So that's right at 31.2 right now. Could that happen? Well, let's look back in history and kind of see what happened here. So to me, in my eyes, let me stretch this out for a little bit for you so it's a little bit easier to see. So look at this. I want you to kind of visualize this move here, right here. See this fall down, right? And then just kind of this kind of diagonal wedge. It looks a little similar, or like a mini version of this, right? Look at this fall down. And then if you have good visualization skills here, see this kind of wedge down, right? It just kind of leaks down. And it continually, like, here's our initial wick down, and then we rise up again and just kind of, do nothing for, several weeks, and then, bottom of the Bollinger Bands, top of the Bollinger Bands, just like a ping pong back and forth, right? So look at this move now, right? A flush down, there's your initial wick, back up to the EMA 8, and doing basically nothing for a couple weeks now. And then, so let's say we kind of repeat something similar. Maybe not this long because, like we said, it's looking like a mini version, right? And none of this has to hold true at all, right? TA is only useful for potentially drawing patterns, right? It's not meant to predict anything, okay? It's just meant to give you a little bit of a leg up on some potential patterns playing out. What have we done? So this, when we fall down here, right, this kind of formation tends to break to the upside. And what do I mean by that? Well, you can kind of draw this loosely based kind of down kind of wedge pattern right here, right? See this? You're continuing making lower highs and also making lower lows, right? At the same time, you have your initial fall down here, right? So when you do this kind of pattern, that tends to break back to the upside. Or if you're like, I'm not real familiar with that, well, just flip it around, right? And then you see this, right? This is an inverted chart. So if you see this happening, you quick rise, and then you're making higher highs and higher lows, that's more often than not going to break to the downside. But in this case, right, that is to the upside. So we had this play out on a weekly scale as well. You can even see it here on the daily, right? Look at this. So you got your initial move down here, and then you can draw your little parallel channel here. I just do this just because it's easier. Whoops, let me get the right one. Then you got your kind of loose fit kind of channel here, right? Right, there's your initial down move, higher highs, higher lows, break down, right? And we talked about this in many videos, right? And here's the play out of that. So, okay, so let's back up, right? And then look at our current move, right? Remember this move, right? The downtrend, right? And then look what we're doing here. We're starting to form some kind of a downtrend channel. I don't know how long this is going to last, right? It might not last more than another day. It might last another 2 weeks. It might last, this one lasted like 60 something days, right? So our initial down move to the breakout was 65 days. That's over 2 months. Do the maths, okay? So what if we do something like that again? Well, it's looking like it's starting to want to play out. Something similar to that. Here's your down move, right? And then you got your downtrend channel, lower highs, lower lows, right? Even the wick today, still kind of within that. And, like I said, wicks are, who cares? We could even close down here, and this could still end up being, a fake out, right? We were making lower lows for literally months, right? Just continuing to fall down that channel. So looking like a mini version here. And why I'm saying this is, this will not 100%, nothing's 100% crypto or trading ever. So don't say definite anything, but these will more likely than not break to the upside. And again, if you have trouble seeing that, look at the inverted chart. So how you do that is Alt on your keyboard, hold down Alt, and then hit I for invert. Got it? Okay, so you have your move up, right? And then you're making higher highs, higher lows. That pattern will more likely than not break to this side, right? But we're an inverted chart. So there you go, right? And you don't have to take my word for it. That's pretty standard pattern. And whoops, we did it right back here, right? On a bigger scale, right? A big, solid, quick down move, lower downtrend channel, and then a breakout. Quick down move, slower downtrend channel, maybe a mini breakout. And where could our mini breakout go? Do I think this is going to come? Not likely, right? We're in a downtrend, right? Downwards momentum, bearish momentum is for real. And we've been in a downtrend since November. Okay, so downtrend, trend is your friend until the end. So how will we know the end is coming? We don't. You'll probably look for a lot of volume, right? Volume is important to starting a trend and ending a trend. That's about it. So we need, you can see all the volume down here, right? From the capitulation here. Is the bottom in? Who knows, right? Could it be in? Of course. Could it not be in? Of course, right? Nobody knows. Nobody has a crystal ball. But, if we have another flush like this, you're probably going to see some serious red volume. No guarantees that this could be the bottom. So you have to prepare, accordingly, right? You need to not be 100% anything ever. Become a student and not just watch videos time and time again off of 47 different YouTubers. Try to learn something and extrapolate the data that everyone is saying, take different, cherry pick, so to speak. The good data, the bad data, get rid of the bad, keep the good. I don't suggest watching, a bunch of people. Find a couple of people that you like and stick to those. That'll do you the best news, right? And I would stick to the people that stick to the charts and not, go back and forth to the news. Go look at the most ridiculous price predictions to the upside or to the downside, right? Those are key, right? If you're not watching those people that are calling for 200,000 Bitcoin, back in, last April, whenever it was, in the next 47 minutes, don't watch the people that are calling for, 8K Bitcoin in the next, X amount of days or whatever. Okay. Same thing. There's the insane bears and insane bulls alike. So I would suggest not watching those, if that makes sense. Hopefully that's making sense to you a little bit. Okay. So, all right, we got off on a little bit of a tangent there. So, going back to here, where could we possibly break out? Well, we don't know where we are in this channel, right? We don't know if this is going to actually take 2 months like this one did, or is it going to be half of it, 30 days, right? Something like that. Or will it be, is it getting ready to end tomorrow? Or could it be twice as long, right? Nobody knows. But looking at the rallies, right, we never really got above. Look at the moving averages, right? The moving averages will be key looking, forward to today. And we'll go back and look at it. But here's the 50, right? We never got back above the 50 until it was over. So I would say that would probably hold true in my book. And here's the 200. I doubt we're getting back above either of those until this carnage is over, for a more permanent amount of time. So the green is the 50, the orange is the 200. So watch those. No, also, we barely got above the 21. Even it was only very briefly. It was kind of the fake out up, hit the top of the Bollinger Bands too, and then right back down in a pretty severe way. So we went from 41.3 to a 30% drop to 28.8 in less than a week. So that is pretty crazy. So if we get a rally, I would say the odds are, at least for now, that we actually do something like this. Okay, I think any rally at this point will just be a fake out, right? We haven't spent enough time hanging out down here yet. So if over the next week or two we get a rally up to, the top of a Bollinger Band or to 50 moving average, that would be a time to, exit some positions or take, I don't say profit, but exit some that maybe you're strangled on. If you're 20% down now, maybe you only be 10% down, right? Something like that. So let's go. Remember, the 50 and the 100, the 200 is, way out at this point, right? The 50 and the 21 are right here, right? Look at these. So 34.8. I mean, this is decreasing day over day. So depending on when and if we do have this breakout, right, which the odds are that we do break up at some point in the next X amount of days, right? We don't know. We just need to be watching. And, step one to get that rally is a multiple daily close above the EMA 8. And then there's your 21 at 31.3, right? And your 50 is going to be, at least for now, above the top of the Bollinger Band. So it's not likely we're going to see that 50 mark, right? It's not likely you're going to have just a massive rally exceeding a whole lot higher than the top of the Bollinger Band. So we'll be watching for that, especially after this massive downtrend, right? So if we get up to the top of the Bollinger Band and it's, close to the 50, use your spidey sense and realize that not only that is happening, but look back yonder, right? These lows, right? This will be the zone right here. So if we get a rally in the next handful of days or weeks, right? We'll cover it. We'll make another video on Monday, see what happened on the weekend. Actually, we'll probably make a video on Tuesday because this is a holiday weekend and I'm leaving, going on vacation. There we go. So somewhere in there, it's unlikely that if we have a rally, we're going to exceed anything in there, right? And we have major resistance right above that at 37.5. So I mean, we could highlight this one in. Let's do hardcore devil red because the devil's got that on lockdown. And highly unlikely if we get a rally up to like say 35, 36, and you're like, hey, maybe we got a nice rally. The bears are waiting in full force with helmets and body armor, right? Don't even try it. We haven't. And why do I say that? Why couldn't we just rally back up like we did back here? We spent over 2 months down here, right? We haven't spent enough time after this, scare drop back to 25. We need more time. We need more consolidation, right? If we have a rally now, it's going to be just like back here, right? It's going to be just like back here. So just trying to prepare you, right? We might be right in this area right now, right? We just had another wick down close to our previous low, right? 28K is the lowest we've been in since, right, really right down there, right? So if we have a rally over the next couple days like this, or the next week, right? This probably another week or so. I'm trying to set your mind up that this is probably going to be something like this, right? So we had a rally up about 20%, and then within the next week after that, after rejecting off the top of the Bollinger Bands, holding resistance under the 50-day, just 30% drop back down to a new low. Notice that, a new low. And that was, in fact, the actual low, okay? So keep that in mind. That was the low. And, we've talked about this in our last video, I believe, that once on the weekly scale, once the 21 week, the yellow line, crosses the 100 week, the blue line, the bottom is in. Since 2014, all bear markets, when the yellow crosses the blue, the bottom is in. The bottom is in. So I'm going to repeat that. The bottom is in when the yellow crosses the blue, right? You don't have to take my word for it. You don't have to do anything. Go look for yourself, right? There's the yellow crossing the blue. The bottom is in. And it's like right at it, right when it happens, right? Go back. You can go back in history and look at this on the BLX. Let's just do it. We're making a long video today anyway, so let's make it longer. I don't know where I was going with that. I was trying to rhyme something and it didn't work. I'm trying to take off the Bollinger Bands because when you put it on log scale, just whatever. So there we go. Here we go again. So the yellow crosses the blue. There's your bottom, right? That's 2015 now, right? Now we're on the BLX going way back. So we didn't have it before that, but you can kind of imagine we didn't even cross, right? So there's one, right? We only have a couple data points, so not put too much into it, but historically, going back to 2015, here's the bear market here. We crossed, that was the bottom. Doesn't mean we have to explode after that, right? There was still, here we go. It was still really another 200 days until we really started, kicking the rally off, right? After this last test of the 200 week. So keep that in mind, right? 200 week. We crossed here, the bottom is in. Did we go crazy immediately? Not really, but, it's faster than the one before, right? So here's the bottom. And really, I would say, here's our last touch point. That's still 70 days, right? That's still, we're approaching 2 or 3 months before we really get moving again, right? Here's COVID, the drop here, hold again at the 200 week. And then we did actually recover pretty quickly there, right? So just keep that in mind. If you see us crossing here and we're putting in a new low, that might be the low, right? Especially if we wick down to the 200 week, right? We have 3 touch points there. Here's the pandemic. Here is the 2018 bear market bottom, and then dual touch points back in 2015. So keep that in mind. If you see all this happening, right? A lot of people will think lower lows, right? And when in history do you know of the massive amount of people, the masses, predicting anything correctly, right? So there'll be a lot of people calling for much lower lows. If you see us at 23K, keep in mind that could be give or take 10% or so, right? Because we could have a wick, right? Historically, we don't just come down here like in 2018 and just hold right on it without a wick. I mean, there's the pandemic, right? We have multiple touch points back in here, right? Look at all these wicks, a little bit lower, right? So we could wick to 21K or 20K, 19K, something like that. But historically, the 200 week, a lot of smart money will have some bids in there. So be warned that if you have your bid right there and you get front run by a billionaire, your market order probably will not get fit, or your limit order, right? So hopefully you got some orders in now. If you have cash on the sideline, at least start to buy some there. Not financial advice, but anyone that's been around for a long time, I guarantee you has some orders circa this area, okay? Somewhere around, this box, right? That someone's getting some orders in that area, right? You could extend it a little bit either way because you don't want to get front run or, left behind, barring one of these wicks, right? You don't want to go all in here, but, a 10, 20% of your stack that you have reserved on the sidelines is always a decent idea. No guarantees that we hit this either. Remember that, right? We don't know if the low is in or not. I would say, I want to say 100%, but I would say 99% of people that I've been watching says the low is not in. So there's a potential that it might be, right? I would say the odds are maybe not, but watch these weekly moving averages. When the 21 crosses the blue, you know what to do, right? Coins Kid gave me a shout out the other day for saying that. So That's his phrase. When the yellow crosses the blue, you know what to do. People misinterpreted that on his Twitter, and they're like, "Should you sell?" No, that's the opposite, right? That's what the idiots will be doing. But hopefully you follow us both, and you'll realize that those are times to be starting to come back into the market, right? When everyone's panicking and we're putting in lows, but historically, when the yellow crosses the blue on the weekly, you start to buy. When the price starts getting anywhere close to the 200 week, and I would say we're pretty, relatively close now, right? You start to buy, right? The calls for random random prices, and let's. I wish I would have been quicker on this. It would have been better, but screw it. There we go. I was looking for just random areas like this. I mean, I've heard calls here, 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 here. Not one person has said maybe a potential bottom is in already. Right? So I'm just, when in history has anyone in the masses predicted uh, anything correctly as a group, right? As the masses, right? Obviously, there's going to be some people smarter than other people, and whatever. But hopefully, you're catching my drift here. Just watch the prices and not the news. The news is not going to help you ever, right? Watching the price charts will help you. Watching levels start to overcome. Watching daily candles start closing over moving averages will start to help you, right? This pattern will more than likely break at least a little bit to the upside, and it's just more likely. Does it have to happen? Of course not, right? This could just dribble off and capitulate again to 22, 23K. But watch all this stuff that I'm talking about. I have no benefit to saying any of this. I'm just trying to help you as much as possible. So that's that, at least for Bitcoin. So sorry to ramble. Let's go check out the dominance, and you might see some of these coins not doing as well as Bitcoin. Right? Did you notice Ethereum today going down hard against Bitcoin, and Bitcoin's not really even moving? Why is that happening? Well, it's because of this. Bitcoin dominance is starting to rise and overtake levels we haven't seen in quite some time, right? We have to go back to October of 2021 to see Bitcoin dominance as high. And Bitcoin dominance is simply its control over the rest of the market. So if this continues to go up and we start breaking outside of this box, like 48%, right? Putting in new highs, not seen since going back to last summer, right? Or, watch out if we get over 49%, and Bitcoin starts to go up or down. The rest of the market will, if we go down 5% on Bitcoin, the rest of the market will likely drop much more than that. If we go up 10% on Bitcoin, the rest of the market will likely not even come close to that, right? That's what Bitcoin dominance does to the market. So watch this. This will be key. And you're seeing proof of that right now. And there'll always be anomalies like Ave's just randomly going the opposite way. There's always fish swimming against the current, but for the most part, most things are down much more than Bitcoin right now, and it's because the dominance is creeping up here. So be watching this, keep this on your radar, and realize that if we start to break up 47, 48%, if we get above 50%, Bitcoin is where you're going to be if you want exposure to the market, right? Obviously, if we go down, cash or stable coins are great. If we go up, Bitcoin's going to be where you want to be if Bitcoin dominance is up in here. If Bitcoin dominance is low, like 40%, 39%, then altcoins are great to be if Bitcoin rallies, right? You're not going to have altcoins rally if Bitcoin's dominance is over 50%. That's just how it works. Like it or not, take it or leave it, Sally. So watch this. Bitcoin dominance, that's all I'll say about that for now. We'll touch briefly on it on Monday or Tuesday, Tuesday's video, because Monday's the Memorial Day and I'm out of here. So watch that. We'll check it back up on it on our next video, likely Tuesday. DXY, briefly touch on this for the 4 people still watching. Notice here, the DXY. We're at a kind of a key pivotal moment here. We need to capitulate on the DXY if we want crypto to move back to the upside. So this might be a cause for a relief rally. So like I've been saying, the first 15 minutes of this video, that formation that likely leads to some kind of a rally over the next week or so could be caused by this. If the Bitcoin dominance comes down again, we want to be watching, because anytime we've broken the 50-day, right, this is the 50-day moving average, where do we fall to? Right to the 100, right? 100 to 100, right? At least for the past, quite a bit of time since we've actually gotten bullish again on the DXY, the US dollar, for some ungodly reason. We need, so if my point is, if we lose this and we fall to here, we will likely see that move out of Bitcoin and all of crypto to the upside, at least this would allow for a relief rally. And then what would cause us to go back down 30% is a bounce at this area. So if the DXY does something, shake the screen. If the DXY does something like this over the next week or so, and then holds this moving average right here, and then bounces and starts doing that, well, here's your relief rally right here, and here's your 30% capitulation back to 22, 23K. If we do something like this, which we've done, this shouldn't be that shocking. So if we do this, rally. If we do this, capitulation. If we do this, little rally. If we do this, death, 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 double death. All right, so hopefully that's making sense to you. And so this actually closes tomorrow on the weekly scale, so this will be significant as well. Why? Well, look at this. So on this formation, this is actually bullish formation, right? The bull pattern, the breakout, a retest of this area, and a bounce would not be good, right? So you got to watch this. We're right there right now, right? Look at it. However, if we close under this 8-week EMA, that would be maybe a good sign. So we need a close under 102. So tomorrow, the DXY closes on Friday. So tomorrow, 1 day, 8 hours. If we close under the 8-week, that could be a crack in the ice for the DXY, and that could lead to a bigger downfall, which would lead to a bigger rally out of crypto. So if we close under 102, and then you see us, opening next week, and we start to do something like this, I would say crypto's moving. And then if we come back and test the 21, right, and then we bounce again and continue, right, here's our capitulation again, right? Or, best case scenario for crypto, we come down, we hit the 21, we kind of hold it for a week, and then kind of go down again, right? This could be what we need to turn the ship around a bit. And crypto could have a more sustained rally, or the Fed starts to reverse all their BS and start to back out and get a little bit more dovish versus hawkish. Then we got some grease we can maybe start cooking with, and then that would catch everybody off guard, right? Crypto would just start rallying and then not stop rallying, and then we would see some, in the words of Winston from Ghostbusters, you're gonna see some serious. That would be great. Okay, so maybe I'm getting ahead of myself here, but just give you a little bit of excitement for the weekend. I'll do a little bit more updates in our Telegram and maybe some Twitter stuff tomorrow. So follow us there if you want more of this fantastically boring stuff. And other than that, I'll try to end it here with our quote of the day and our car of the day. Here's our quote of the day: and appearances are a glimpse of the unseen. A little bit hazy on this one. If anyone's got some deep thoughts on this, leave me a comment. I'm struggling to wrap my head around this one a bit, but I'll go with it because that guy's probably smarter than me. Here's our car of the day. The McLaren F1. That's a random car. We've never really done an F1 car. Maybe we'll start doing a couple more. Why? Well, I like F1. I try to watch it whenever I can. Maybe you do too. We never really talked about it, but I'm an F1 fan for sure. More importantly, we're the Lego has just come out with the F1 car, and this is not a small time thing. This is huge. It's like 2 feet long, right? You can see the measurements here. I know you can't read it. It's like 25 inches. That's what she said. So yeah, I just got this delivered yesterday, so I'll be putting this together in my spare time, and we'll give you an update when I get that built in 3 years from now. Just kidding. So just thought I'd do that today for that. It looks pretty similar, huh? We'll see. Pretty cool. F1 McLaren. I got nothing else. Hopefully you found the video today at least educational a little bit, if not mildly entertaining at some of my stupid stuff. Damn, this is a long one, 30 minutes. So I'm going to get, if you watched to the end of this, you probably skipped. Anybody that watched the full 30 minutes through here, I I'll sign your autograph because you obviously, I'm not that good, right? I'm not, maybe just like my hat. You're just checking out all my cars. You're trying to figure out what all these are back here. We got the Lego Cybertruck up there, the Lamborghini Sion right there in the green, which I can't ever figure my damn hand out. It's right there. Then we got, let's see, we're rambling. Lamborghini, Centenario Roadster right there, my favorite car of all time. There's no under. It's like $4 million now. It's over. We got. I have to look now. The McLaren 650, the McLaren 675 LT, the Tesla Roadster in the red, the Aston Martin Vantage in the very subtle neon yellow, and the McLaren Senna. Yeah, that's those. If you're wondering, we got a bunch more down here. Let me know if you want to see what those are. You don't care. I get it. We got some Lamborghinis. We got the Mercedes CLK GTR, very rare car there. We got a Bugatti Divo. Oh, that's yeah, Bugatti Divo. Both of those different colors, and Bugatti Veyrons, Chirons. Ferraris down on the third shelf. You can't even see them. I'm gonna redo this. I think I got to get more cars. I have 150 cars, just like this, all right over there that you can't see ever. So maybe I'll redo this a little bit. I mean, chain link sign is cool, but cars are cooler. I mean, I've sold a lot of chain link to buy some of these cars, and I don't know where I'm going with this. All right, have a great weekend. What are you doing on Memorial Day? Let me know. I'm going on a mini vacation down to ride some roller coasters and stuff. Anybody like roller coasters? What's your favorite one? Your favorite one of all time? What does it do? Do you like the fast ones? Do you like the high ones? Do you like upside down? Do you like wooden? Wooden ones are becoming rare. I've ridden a couple wooden ones. I've been to several different states and ridden many roller coasters. Been to Ohio, Florida, Texas. Yeah, I've been to Texas. Um, Indiana. They don't have much. What else? Where have you been? Anybody been out of the country and ridden a roller coaster? That would be insane. We're going for a record amount of video saying nothing. I'll end it here because otherwise it'll take 3 years to upload. All right. I appreciate y'all watching this long. If you have, for 0.0 of you.